It's funny that everyone is talking about the ECB credibility and those rumors about tapering. Credibility, think about the Fed. At the beginning of this year, we were expecting 4 rate hikes because of the misguiding dot plot of the Fed. So we wonder who is really losing its credibility.
So the US election is the big story at the moment. Will the election and the Fed affect the bond market?
Yes, it's interesting. In the case of Hillary Clinton being elected, it is going to be difficult for her because she will not have the majority on both House and Senate. So it will be difficult for us to pass on reforms. The situation will remain as it is right now with Obama. And as far as the Fed is concerned, probably Mrs. Janet Yellen mandate will be reconducted, and she will keep her very accommodative stance on monetary policy. Although we are expecting a rate hike in December, it will be quite bullish for bond markets. So that will be a good outcome for our market. Now, in the case of Trump being elected, it's going to be a quite different situation. He's going to spend more. He's going to cut taxes. So the deficit will increase. That will have a negative effect on the bond market. And as far as the Fed is concerned, we don't think that in this case Janet Yellen mandate will be reconducted. He will probably push for someone more hawkish. We might have more aggressive rate hikes. That will be quite negative for bond market. And we don't exclude in that case that we will have a recession in the year ahead. So we can also question ourselves about the independence of the Fed in that case.
And what do you have to say on this?
Yes, I totally agree with Annie. If Hillary Clinton becomes president, it will be the continuation of Barack Obama's policy. So markets should not change dramatically. In the case of Donald Trump, it's very difficult because we don't really know exactly his program, but markets will be more volatile. And as Annie said, I am more pessimistic than her on the global economic outlook on the US. So I would say that if a recession is supposed to come next year in the US, with Trump, it will be more painful, and the recession will come sooner rather than later. But first, and in addition with Trump, the problem would be not a collapse, but big problems in the emerging markets, Mexico first. And but having said that, keep in mind that whatever the president of the US, the main focus for us is the Fed behavior and the probable rate hike in December. Probable because nobody knows, it's still 50-50, and probably they are shy and they are a bit reluctant to hike. Maybe the outcome of the election would be a good point in order to postpone the rate hike to next year, or maybe never. Not never, but...
So let's talk about the ECB and the recent rumours of tapering. What are your views on this?
It's funny that everyone is talking about the ECB credibility and those rumours about tapering. Credibility, think about the Fed. At the beginning of this year, we were expecting 4 rate hikes because of the misguiding dot plot of the Fed. So we wonder who is really losing its credibility. As far as the ECB is concerned, we are quite confident in the sense that we expect Mario Draghi to give some good news and some positive relief in terms of some more easing, I would say. He will probably extend the program ending in March 2017. He might make some changes also to its self-imposed constraints, like not being able to buy bonds below the deposit rate, or the cap in terms of country, GDP country, the 33% cap. In terms of the purchases, we are very confident because, okay, inflation is a little bit higher than before. he really avoided deflation in Europe, but we have an unemployment rate at 10%. For us, it's impossible to think that the ECB will taper in such an environment. Although their main focus is price stability, we are far from a kind of dérapage in terms of inflation, and we still believe that the ECB will give some easing. I don't know what you think, Eric?
Yes, the story of tapering is a joke. It's not. No, I thought, no, sorry, it's the 1st of April. It's not possible. Because the economic situation in Europe is improving a little bit, but not enough, and inflation is very low. And to me, the probability of deflation today is more important than the probability of inflation. So, as Annie said, I think that the QE could be extended, but probably not expanded. Because the Germans, and yesterday they said that it's not normal, they are in favor of tapering. So I think that the purchase program of 80 billion per month will not increase. We will not go to 100 or 120. But I think they will continue after March 17 until the situation is clear on both growth and inflation. And I would say first inflation, because you know that the mandate of the ECB is inflation, nothing else.
So let's end this debate with what trades you're backing and why.
Yeah, in terms of our top trade, we are recommending our investors to protect themselves a little bit against inflation. So why not buying some US TIPS, Treasury protected securities? Although the performance has been quite good year to date, almost double those of nominal bonds. We think as long as commodity prices remain stable, you've got a positive carry. So we believe, and you have half duration as to the nominal bonds. So let's buy some US TIPS 10-year. We think there is some value. Otherwise, we have a big overweight cash, I would say. We are a bit cautious short term. I mean, till the end of the year, we remain a bit cautious because we are scared about the implication of a rate hike, although it is well expected.
And where are you putting your money?
Today, we put our money more or less the same as Annie. We implemented a very aggressive policy in our US funds in January, and we bought a lot of 30-year treasuries, both TIPS and nominal bonds. And in October, the curve steepened substantially, and 30-year treasuries underperformed substantially, and we added more treasuries. So I agree with Annie. My top trade would be increasing the weight of 30-year treasury, both nominal and TIPS, and obviously a 30-year treasury have a duration above 20. So if you are a bit scared by this huge duration, maybe you could implement a trade called flattening of the curve, and you could be long 30-year and short 2-year or 5-year. So you are short the short end of the curve that could be volatile due to the behavior of the Fed, and be long 30 years. So short 2-year, long 30-year, or my favorite trade is long 30-year outright. In addition, if you are a fan of Hillary Clinton and if you want to bet on her victory, maybe you buy Mexican bonds. And I know that Annie is a fan of a Mexican peso.
Well, thank you both for joining me today and having this debate. And thank you at home for watching. Don't forget you can catch previous debates by clicking on our channel. Goodbye for now.